Welcome back to Community Real Estate Talk Show. I'm your host, Tyler Freed. We're on Tacoma's Conversation Station, Clay, 1180 AM. Really excited. We've got Bud Perry with Alaska USA Mortgage Company. He's going to be calling in. Looks like he's on the line right now. We're going to patch him through shortly and just get an idea of what's happening out there in the mortgage world. So we'll patch him through. Hey, Bud, you there?
I'm right here.
How you doing, man?
I'm good. How are you?
I'm doing good. Thanks for taking some time to call in today. I really appreciate it.
No problem at all. I love being on the show.
We want to get some more of your knowledge. We know it's your second time calling in, and can you kind of update us what's kind of been happening? I know the rates kind of dropped a little bit a couple weeks ago. Has that kind of spurred up some activity?
Yeah, it has actually. Since we last talked, I think we've probably seen a good quarter to 3/8 in rate, probably, which is huge. And it's not that rates were bad before; they were really good, and so they've just gotten better, and it's spurred a lot of activity, and things are going really good right now.
That's what I like to hear. Does it seem like the buyer calls have kind of increased lately?
Yeah, it has. It's a great question. The funny thing is, it's kind of in a lot of markets, it's either one or the other. Meaning, it's either a buyer's market or a seller's market sometimes. And right now, it kind of feels like it's both. Where sellers, there's not a whole bunch of inventory, but there's enough. So it makes it pretty good for sellers, but it also makes it really good for buyers right now too because of where rates are. So it makes their buying power that much better.
But last time we talked, you mentioned a little bit about the loan programs that you guys are doing over there. Is there anything that you guys have kind of added, or you're seeing to get used a lot more than in the past?
Yeah, we've added some really good jumbo programs. We added Fannie Mae used to have a 3% down program, and they got rid of it probably a year ago now. Don't quote me on that, but I think it was about a year ago. And so what we did is we replaced that with a program very, very similar to it. It allows 3% down from the borrower. So we've kind of, which is really good. We've kind of tried to kind of suck up the spots where the investors kind of went away from, and so it's helped quite a bit. It helps the borrowers too. Even if you look at it on the other side, if a borrower has 5% or 10% down, a lot of times I'll tell borrowers, hey, if you want to keep your money and invest it in some other places, take it, keep it, and just put the 3% down. There's a lot of decisions to be made, and you don't necessarily always have to put down the maximum amount.
And they gotta like having those conversations with you and seeing the options there. I mean, there's so many different options for people to go through. Is it still a lot of people are doing the lower down payment programs?
Yeah, yep. There's a fair amount of people using those, and a fair amount of people also putting 20% down. It's never been one way for me, anyways, in my business. I can't speak for everybody, but since in the 11, 12 years that I've been in business, it's never been one specific way. Sometimes it's somebody buying a second home and they're putting 15% down, and sometimes it's somebody buying their first home and they're putting 3.5% down or 3% down or whatever, and it all depends on that individual's financial situation, and that's part of what we try to do on our end is help them, understand what different choices they have, so that they can make the decision. It's our job to tell them what's out there, what programs, what niches are out there for them to choose from, and then let them make the final decision for themselves on how they want to manage their money.
It seems like the move-up market had disappeared for a while. I'm talking North Pierce County area, a little bit of South King. But now the move-up market's kind of back. We're seeing some good equity in homes, and the higher dollar homes down here are starting to move. Are you seeing that translate where people are selling and getting good equity and then doing a good chunk down on their down payment?
Exactly. You hit it on the head. It's a while ago, probably a year and a half, maybe even more. The values just weren't there for the people that wanted to move up. They just couldn't get out of their house. But now we're seeing values up, and so it's bringing out a whole nother segment of the market that we just didn't see before.
And let's talk about, we're still running into a lot of people got hurt by a foreclosure or a short sale, and I know the best thing they can do is talk to a CPA or whatnot. But are we seeing programs out there where they can, after they've waited a little bit, are we going to start seeing waves of these people enter the market again?
Yes, for sure. And there are ways now. I won't go into specifics about how many years and what type of bankruptcy or what type of foreclosure or stuff like that. But yes, I mean, definitely. I always want to encourage people to, if nothing else, just pick the phone up and call me, call whoever, call someone, and just get the specific guidelines, because borrowers and my clients, they don't do this on a daily basis. I do it on a daily basis and all day, every day. And so, let me call me and let me know, the questions they have, and I can point them in the right direction at least and get them on the right track.
It's so true. I mean, you're doing this every day, and people probably have credit questions all the time in terms of how to build it up and suggestions and everything you have there. What are some good ways for them to get that built up quickly?
That's a good question, and something I think we didn't hit on last time you and I spoke is a lot of times when people pull their own credit report, I'll get a lot of clients that come in and say, or maybe not even come in, that I talk to on the street or anywhere, and they'll say, well, I don't think I can do anything because this is where my credit score is at, and I'll just tell them the credit report you're pulling may not have the same liabilities and debt that the credit report we pull has on them. So, and also we pull what's called a tri-merge report, so it pulls all of the bureaus, TransUnion, Equifax, and Experian. So a lot of times they may be thinking that they have a 600 credit score or something, but maybe that's only Experian that's reporting that, and Equifax and TransUnion, may be considerably higher, and we take the mid-score. And, I can't tell you how many circumstances where I've pulled credit and borrowers thought they couldn't do anything, but when we look at their mid-score, they're in an area that allows them to do pretty much anything they want.
They got to call you and pull their credit and just see. I mean, I'm sure so many people are doing it online and, I'm at 600, I got to wait to get up there. I mean, and there's some tips you can give them too if they've got some, problems that are coming up on that report, right?
Oh, that's a great point too, is that borrowers should understand that, hey, if you can't do anything now, that doesn't mean they shouldn't be doing something to work on their credit, because there's a lot of stuff they can be doing that they may not know about. And, asking those types of questions to people in my business is paramount in order to get them on the right track in a decent amount of time. If they're just not doing anything, their credit's going to stay stagnant.
Are you still, I mean, the short sales and distressed property have really kind of died down in the area, but are you seeing people get tied up in these short sales and having a tough time figuring out when to lock their interest rates? Yes,
that's been the age-old question is, on pre-sales when you're buying a new construction house, or short sales when you don't know, should I lock, should I not lock? And so that takes a little bit of finesse, and frankly, you want to talk to a lender that's been in business, that knows what they're doing, that doesn't, early in my career, I made the mistakes of maybe locking somebody too soon, and then we can't close on time, and you live and learn, and that's just the way it goes. But now it's a delicate question, and they've got to, I've got to talk. I talk to my clients and talk them through the what would be a good word for it? It's bittersweet, I should say. Sometimes they have to float the market, and they're doing whatever the market is gonna dictate to them, and that's what they have to take. And sometimes, the decision may be, hey, let's do a 60-day lock and let's get this thing locked up because this is where we see the market going.
Such a tough, just a tough tipping point, isn't it?
Oh, it's there isn't anybody out there. I don't care if you've been in the lending business for 30 years. No one out there is going to know where rates are going to be in 6 months or a year or in 2 months or 2 weeks from now. There's a lot of indicators out there that really help us nowadays to kind of dictate to us what decisions we should make and what we should tell our clients. But in the end, really, it's tough to say where they're going to be at in a month. It's a moving target.
Listeners just joining us, got a good friend, Bud Perry from Alaska USA Mortgage Company. just giving us the scoop on what's happening in the lending world out there. And Bud's been in the business for 11 years and lots of experience with new construction and resale and helping people out with all types of loans. But how's the underwriting right now? Is it pretty quick turn times, or has it slowed a little bit, or what are you seeing?
We're seeing really good turn times right now. We've that's part of our business goal is always to meet deadlines and exceed them if we can. And right now turn times are awesome. I mean, we're getting deals done 15, 20 days. It takes a little bit of work by the client's part because we need certain documents, income statements, financial statements, that type of stuff. But that's all stuff that happens in the beginning. So turn times are awesome. I will always stress, and I'm glad you kind of brought that up, is clients need to understand that it's not lending and underwriting isn't like it was back in the 05, 06, 07 era. It's just it's kind of tedious sometimes, and borrowers can get a little frustrated. But I would say just give us all your patience. We're not asking for anything we don't need to have, and we only ask for what we need. And we're here as a kind of a cheerleader and an advocate for you with the underwriting team as well. So we try to make it as easy on them as possible.
And it all starts with, and I know you've mentioned in the past, is collecting that good file up front and just having everything. And we talked about this yesterday, if there's an issue in the future, trying to foresee that might come up, it starts there, right?
Yeah, it does. It's the better job that we do up front with the client and preparing them and getting all of the documents up front, the better the process will be for them. And really, the communication is key. How I communicate to the client up front is going to set the tone for the entire process for them. If I don't communicate how the process is going to go, what I might need, what I might not need, if I don't communicate any of that to them up front, they're just, they're going to probably be put off a little bit by the process itself. But if I communicate to them everything up front, then they're ready for it. It's human nature. If they understand it up front and they understand what may come down the line, they're okay with it.
It's setting those expectations and letting them know what to expect that makes such a difference. And we have that in real estate too, where when it's quiet, no one knows what's going on, everyone gets mad, right? So it's all about communicating. It's such a huge part of the real estate and lending transaction. Very
true, and you do a great job of that, by the way.
Thanks, bud.
In the transactions that you and I have done is I've learned a lot from you on that side. Is call somebody before they need to call you is kind of the old adage that I've learned over the years. And you do a great job of it. Even if there's nothing really to tell them, just to tell them, hey, we're still right on track. It may be a 30-second phone call, but hey, we're right on track. Nothing to worry about. We'll call you in a couple days or so and give you another update.
It makes a huge difference. I wanted to ask you, we've had this coming up with a couple of our agents is appraisers, kind of taking a little while to do their appraisal, and people with prices rising, kind of waiting on pins and needles. Are you seeing most of the stuff come back at value?
Yeah, the stuff I have, that doesn't mean I haven't heard, some stories where stuff comes in under or stuff actually comes in over, but most of the stuff I've had is come in very, very close or at value. I haven't had too many problems. So yeah, I guess to answer your question, no, not a whole lot.
But can you explain that process, what an appraiser does to the listeners out there?
Yeah, for sure.
And how we just wait to hear.
Yeah, that's a good point. Yeah, very good point. So the process is in the old days, Bud would just call up his appraiser and we'd say, hey, I need you to appraise this property at such and such address. Let me know and get back to me. And anyways, through the legislation that we've all come under, and it actually has been for the better, is that the appraiser has been taken out of the communication link directly with somebody like me. So loan officers don't talk to appraisers directly anymore at all, really. So it's made it healthier. It's better that way. The appraisers now they talk. We all use a third party company to order the appraisal, whereas before we picked up the phone and, or sent them an email today, I need you to do this. Now we talk to a third-party company. That third-party company orders the appraiser at random, and then that appraisal is ordered and done by whoever gets that order. And so the real estate agent, the loan officer, they're completely outside of that process. So we don't have any say or anything in what's going on with that appraisal at all. So I'm glad you brought it up, and I want to stress to anybody that's listening, if it comes in overvalue or if it comes in undervalue, we don't have any part of that, and we don't want, and the market doesn't want us to have any part of that, and we don't want any part of that. So, when it comes in low, I've had clients in the past, kind of be upset with me, and I have to try to explain to them, look, I don't have, and none of us do have any part of the appraisal process at all.
And that's a tricky thing when they come in low. I mean, there's a couple options. The buyer can bring in more money to meet the difference, which they're never going to want to do. The seller can lower the price, which they usually never want to do. So, I mean, all we're doing as real estate agents and lenders is we're trying to find you that best house out of the 10 that are similar to what you're looking for and get you into it and get you financing and get you locked in at a good rate and happy about the home. It's tough sometimes to narrow down a price. I mean, prices can be rising, and condo sales. I've got one that I'm waiting back on the appraiser, and we're $10,000 higher than the last sale. But the market's picking up there in Seattle, so it's a tricky position to be in.
It's very tricky, and to kind of touch on that point some more is a good team of lender and real estate agent that are kind of on the same page, that understand kind of what's going on and what goals need to be met and where the client wants to be and what they don't want. And there's clients may not know it, but there's a lot of stuff that goes on in the background between the lender and the real estate agent if they have a good communication line and they work well together to negotiate. Or maybe not negotiate, not the loan officer and the agent, but the loan officer and the agent communicate well to each other so that the real estate agent can go back and negotiate in certain ways that if the communication wasn't there, it wouldn't happen. It just wouldn't be as cohesive.
That team factor is so important. I just had a new construction one where we had to use the preferred agent, and we negotiated really well and got a bunch of closing costs, and we weren't able to use all of them. And that sometimes happens when there's credits for particular loan rates. Maybe the buyer had a lower credit score or something.
Right.
But if you have that relationship up front, if Bud's in that same situation, he's going to figure out a way to use every single dollar. So it's very important to have that relationship between a realtor and a lender there.
Yeah, for sure. Or let's say I don't know. Let's say there's multiple offers on the house, and loan amount has to go up. If there's not a good relationship there with the real estate agent and the lender, well, the real estate agent isn't going to know, hey, can we do this? And, can I get a hold of you, in 5 minutes? And you can tell me if they're up, if they're approved for another $5,000 or something. If the communication line is open and, people are working quick, that can be the difference between those people getting the house and not.
I love it, Bud. You do such a good job. I'm excited to work with you again. Thank you so much for calling in, and enjoy the rest of your Saturday, man.
Same to you, Tyler. Thanks for having me.
All right, Bud. We'll talk to you soon. Take care.
Okay.